Good afternoon, everyone. Happy Friday. Gabe Velazquez here with you, transparenttrading-solutions.com on a Friday. What is it? May 19th. Man, this month is flying by. Welcome, everybody. Hopefully you had a good trading week. It's been all about AI, right? It's getting a little bubblicious, actually, the AI trade, right? Everywhere, anywhere you see it, and that obviously is what's driving the Nasdaq and so forth. So, anyways, let me welcome everybody to the channel. Go ahead and subscribe. Tell people about it so I can keep growing it. Give me some comments and so forth. Little housekeeping. I do have a class upcoming next Tuesday, 4 o'clock Pacific. I think it's going to be an important class about some of the biggest mistakes I see people making that prevents them from moving forward as a trader. So if you like to sign up for that, it is a free class. Go ahead and hit the link below. Okay. If you want to spend 5 free days with me or sign up for the newsletter, all that good stuff, you can hit the website, transparenttrading-solutions.com. Okay. All right. So let's get into the markets here. Today was very, very quiet, kind of a pause. And again, I was with you on Tuesday. It's all about the Nasdaq still. The S&P did try to break out. In fact, we hit a level that I mentioned to you guys, a little gap level at 42.21, and we're kind of backing away from that. Not a whole lot, only about 20 some odd points so far. We got the debt ceiling was almost, everybody was perceiving that as a done deal. We know that how that goes. And so now what happened midday was apparently there's it's hitting some kind of snag, an impasse. So that's going to be interesting this weekend because everybody was kind of talking about they're going to, kind of sign the deal, when Biden gets back and all that. So that is going to be really interesting. And that thing falls apart. The technicals are also setting up for a pullback. We'll see. We are in some shorts right now. Namely, I've been using Tesla as almost a proxy for the market, kind of like the S&P on steroids. If you've been watching Tesla, we did have a trade on Tesla, after the investor day on Wednesday, I believe. We made some money on the calls, kind of, but overall it was kind of a net break-even trade because we just didn't have enough movement. But in any event, look, we're sitting right at 41.96. There are some levels higher. We are actually coming into a daily distribution around 42. Almost 4,300 on the S&P, but more or less, got to look at the Nasdaq. The Nasdaq is really stretched right now. It is looking at the Nasdaq futures chart. You can see clearly. I mean, that also hit a level, by the way. There's a little kind of wick over wick on an 8-hour. You can see that. Again, not a big reaction thus far. Let's call it 13,900. If you pull up a 4-hour chart, you can actually see that. One of my favorites is that wick over wick, we call it. So that is paused right there. It's got some room to pull back all the way back down to like 13,500 if it does pull back, which is probably due for something like that. All of the mega cap stocks are sitting at resistance levels. I think it was Microsoft did kind of break out a little bit. So did Google, but didn't have a lot of follow through today. So it's going to be interesting. I think that's really the key. And what's the catalyst? So if you have a potential catalyst, i.e. the debt ceiling talks, possibly not not going as smooth as everybody thought, which was, what caused the rally, was it yesterday? And the technicals lining up where you have a lot of these, averages, particularly the Nasdaq and the S&P, at some of these distribution levels. It's interesting how that happens, right? When you have these things lining up, it tends to work out. And again, it's uncanny how the technicals usually line up with whatever happens afterwards. So again, I'm a big proponent of this. If you follow a process, it's really interesting. After the fact, you always go, oh, look at that. Well, what caused that? Like the banking crisis. Remember when the banking crisis hit in March? Well, we were right at some levels there, and so on and so forth. So we're kind of setting up for that. I do have some short exposure. We do have some TTS short exposure. We got, I think I mentioned already, we were in the SQQQ. Obviously that blew through that level, and we've got some puts in Tesla right now, and some calls, by the way. So we're kind of delta neutral on that, or market neutral on that. On the futures, it's been a little bit of challenge this week, right? I mean, all the action really has been in the bond market. So if you've been watching the bond market, the 30-year broke that 129 I mentioned last Tuesday. That finally did break down 129. That was a clear, obvious support area. We broke that down. The next level is coming up around 124 and a half on the 30-year. The TLT also, if it breaks 100, it's got some really nice levels. Like we're looking at the TLT to go long right now. So we'll see what that goes. And then there's the last really level so people have just not been paying attention to the rates because they're so caught up in this IE and the tech rally and all that, AI, I should say. The 113 and a half on the 10-year is like the last level. If we break that, we're probably heading all the way back down to 110. Rates are going to come back all the way back to where they were back in March when the banking crisis hit. So that's worth watching to see if the 10-year breaks down. Technically, I still call it in a range, but it's right on the cusp. The long end of the yield curve, that already, the 30-year already broke. And so if you go on the shorter maturities, you see the 5 years also sitting at a level. In fact, it caught a little bit of a bounce. And the 2-year, the short end, that also broke down. So rates are rising pretty quickly here, which, again, this week, the market kind of ignored rates. But I think, again, if we really continue to sell off in the bond market, people are going to have to start paying attention. Why are rates going up again? If we have a recession and if the Fed is done tightening, doesn't make doesn't square, right? So we'll see. There's some levels on the 2-year that are pretty interesting, down around the 102 level. If you guys are into, I don't know if anybody trades the 2-year. That's a really nice little market to trade on the interest rate front. 62.50 full tick. Dollar's been as I mentioned on Tuesday, the dollar's been going up because rates have been going up. It did pull back slightly today, and then came right, coming right back again. And again, I do believe if we have rates continuing to move higher, you're going to have further upside on the dollar, and in turn, all these currencies are going to keep going down. So I'm focused on the yen right now. I think I mentioned that on Tuesday. That's coming into some nice levels. Gold, as you saw, did try to catch a little bit of a bounce, but that's been under pressure. You can't. Gold will not rally. I know there's a lot of gold bugs out there, but gold will not rally unless you get the dollar falling. Unless there's some kind of exogenous, something, maybe the debt ceiling. I don't know. The debt ceiling will probably cause people. I mean, we did get a little kind of a jump in gold this afternoon when they came out, and news came out that I guess somebody walked out of the meeting or something. Anyways, 105 is the level on the dollar. You can see it broke out above the 103, which we've been talking about. Now, in regards to any of the currencies that we're looking at, most of the currencies, have been very, very choppy. Even the euro, even though it's kind of come down, you can see it's just very choppy trading. The British pound also kind of holding at that 1.2382 support, and the yen is the one that's been moving. I think I explained to my members the other day why the yen, because of that carry trade and so forth. So we'll see. The yen has been having some really nice movement. If you guys are focused on a currency, I would focus on the yen. And the yen now finally kind of broke a little bit, kind of hanging at that 72.5. And that's looks like it's forming a support area. So if it breaks that, then I think we're heading back down to 71 on the yen, which is an area that may be worth looking at. Nothing really going on in the Swissy. The Conbal is still back and forth. We got New Zealand next week. New Zealand hit a little bit of a level here in the middle part of the move, which is not typically the way. New Zealand had a really nice move down, and then it there's again that wick over wick on a daily. You can see it. We actually came off a little bit off that, but the fact that it's in the middle part of the move, this is not typically how when you have a strong move up or down, you want to get to the extreme. So, but it did pull back nonetheless. We'll see how that goes. Probably not until you get down to 61 would be where I'd be looking at. Canada just kind of coiling up, and then the peso just died off again. It's trying to back away, but not getting any kind of follow through on that. Silver, similarly to gold, not really doing a whole lot. I'm not really interested in the metals for now. I think they pull back a little bit further as the dollar rallies, probably down to 1925 would be kind of a decent area for gold. That's a bit of ways. Now it could rally from here, and there's some levels to be shorting gold right around in the 2025 area. So we'll see how that goes. And then copper, we're trying to get long copper. Still nothing on copper. They're just very choppy. Now it's actually just boxed in a little box here. If you watch your copper chart, now it's actually sitting in a tight range, which implies that it's probably going to break to one direction or another. We're trying to get long a little bit lower than that, and there are some levels up top at the three right above, right below the $4 mark as well on copper. Energy, even now, oil. Just now again building, forming a range 69.5, 73.50. I think next week's probably going to get us to moving. The big mover this week, and again we're in that long for, we've been in this thing forever. Nat gas did pop. We had some with the inventory numbers yesterday. There was an increase in or a really sharp decrease in supply, which I think I've mentioned to you here because of the kind of depressed levels that nat gas has been. A lot of these producers have been basically cutting their production and therefore cutting out some of the supply. So the more supply comes off the market, we get a weather change. We're sitting at 270. We had a really nice move. There's a gap at 3. Our initial target was 3. What's happening with the boil, though, it's been having some kind of probably get 5 out of the boil. Last time that we hit 3, boil was at 7, but remember they set it every day, and so there is a little bit of that decay kicking in on that. So that is part of the issue with some of these leveraged ETFs. But nonetheless, hopefully we can make some money on that, and then focus on the futures. Now are really starting to get some traction. Remember it was just very choppy and listless trading for pretty much all last month, which again has been very challenged. A lot of these markets, I have to tell. I mean, if you've been out there trading futures, it's been. Um, I've been shifting gears a little bit, getting more into the options because the futures markets, as you know, have been like the S&P has been in a range now for 6 weeks, and finally, and even now, it's still more or less sitting in a range. I mean, it didn't really get any traction. It's all been in the Nasdaq. So if you didn't catch a Nasdaq move, you're pretty much stuck with the Dow has been in a range and so on and so forth. So been a bit of you got to just work harder. Grains, again, as you know, I've been telling you guys to get engaged in the grain market. So this is again another market that's really been moving. Looks like soybeans, got hit again. They've had a pretty nice drop from a gap at 1450, 1280. We're coming up to some really key levels on the soybeans around the 1275 area a bushel. So that may be something to look at. Wheat kind of range trading. It's also headed down to the $6 a bushel level, which may be something interesting. We are trying to buy corn at a little bit lower level. Corn is coming into some key areas too. So focus a lot of attention on markets on the future side, markets that are moving, which are the grains, a few currencies, platinum. Did I talk about platinum? Platinum also moves pretty good. It's now also kind of tracking copper more or less. If you look at that chart, there's some correlation going on there. So, everybody. I mean, that pretty much sums it up. We don't need to waste a lot of time with stuff that just isn't high probability. And again, next week, and one last thing, obviously next week, as we get closer to that deadline, that June 1, and I go back to the analog 2011, similar situation. Market dropped like 19% in the preceding 2 weeks going into that deadline. That's next week and a half, right? If you think about it, June 1 is like a week from this coming Thursday. So it's a week, from yesterday, 2 weeks from yesterday. So I think that's going to really start heating up. The VIX is sitting at 16, 17. We got a lot of these, NASDAQ way extended. And so I think, we're all set up for that market neutral kind of situation. But I do think we are going to have some really nice volatility starting next week as all of these things kind of come together. Okay. And so be ready. Our activity levels have been dropping on the future side because there just hasn't been a ton of opportunities. Quite honestly, if you have been attempting to trade these markets and you can't hold yourself back because you have FOMO or whatever, I'm hoping you're doing okay, but you know how it is, right? In any event, so again, just to recap here, that's really what we got going. We, if you want to join me for the class this Tuesday, may be worthwhile. It's a free class. I am going to be talking about the 5 biggest mistakes I've seen traders make. And by the way, it's not just going to be some, discussion. We are going to spend some time on the charts, some of the issues when looking at charts, by the way, as well. So it's not just all talk. It's, we will be spending some time on the chart patterns and so forth. What mistakes are, how you look at the charts, there are mistakes in that as well. And everybody makes mistakes. I make mistakes. We all lose money sometime. It's just the nature of the beast. But we can kind of keep our losses small and all that good stuff. It's a mathematical equation at the end of the day, right? So in any event, everybody have a great weekend. Hopefully some of you guys join me for the class Tuesday. I'll see you on Tuesday. Actually, I'll be doing that the day of the class, and then the class follows at 4 o'clock. Okay. Have a great weekend, everybody. If you need anything, if you want something, hit the links below. you can contact me at my website, transparenttradesolutions.com. Okay. Have a great weekend, everybody. Talk to you on Tuesday.